How are you, folks? Enzo DiCostanzo, clinical professor, economics and finance at St. Peter's in Jersey City. And today we're working on tax liability Excel example and the W4 and the W2 forms. Okay. Okay. So, folks, we left off here, and believe me, I got a couple comments from people in class, which I'm always happy to hear, and I sincerely mean that. And I hope the 8th week, we have the 8th week coming up pretty soon. That you guys believe me when I do. I have no tolerance for nonsense, but legitimate criticisms from people who are working hard and have an idea about what we're doing. I'm always happy to hear that, and I try to make the font as big as I believe me. This is not my first video. We've done many of these, and we want to get this worked out the right way. So certainly know that I'm keeping that in mind as we're doing this. So we're going to talk about the W4 today. We're going to talk about the W2 today, and actually, while we're talking here, I should have made it before we started, but I didn't. But I'll quickly do it now. And again, you should be referencing your online video list as we're working on this. So this is another video. So this is my 258th video at the school. 258. So we're past 250 of these things. Okay, and this is going to be W4, W2 Ability Excel. Should we spell that right? Yeah. And I get rid of the length there. Delete that number and gray that out. Okay. So we have that. Okay. I like that. So I'm thinking of the what we're gonna put in the right there. What we're gonna put in the YouTube description. I was thinking of that. The W4, the W2. Yeah. Just make sure we're still sharing. Remember a few videos ago, I briefly did, and oh, by the way, we're gonna be checking the Yankee score as we're going along here. We'll be checking it, so just keep that in mind. So, gift the W4s first, and I'm not gonna. I don't know if I'm gonna go line by line through every single one of these because I have the tax liability video that I want to go over. But we'll go over at least you know what this is and all that. Okay, so I have this set up, the W4 W2 video. We'll be posting this to Blackboard, and hopefully you guys. And really, I've probably said this in a couple of videos. The Blackboard, not that it was forced on me, but the dean said, "Hey, you have to do it." And I said, I could just send everybody an email, but it really is nice to have the whole course organized up there as we proceed through the semester. And I hope you guys feel the same way about that. I think that helps it. And again, you got there'll be a day every week where you can do the YouTube lectures. So you guys have that. Midterm grades are due on the 25th. So I graded all of assignment number 1. So assignment number 2 will be probably graded this weekend, and we'll just sort of move from there. 4 and 5 are due. Really, the 28th is like the last day that I'll take them, but it's really due Monday, and try to post these assignments on the due dates. But like I said, I'll give you a little bit of a grace period. We'll go up to the 28th, and then we'll see after that sort of where we are with everything, because then we have Thanksgiving coming. So I might not do another assignment with you guys because I want to spend some time in the macroeconomy. November might have one assignment, kind of a thing, and then in December we'll see what we'll see what we're going to do final exam wise and all these other kinds of things. Okay. All right, the W4. So again, I like to think the font is pretty good with this. It's an employee's withholding certificate. Okay, you fill it out when you start to work someplace, how much tax and based on your answers or how you fill out your status or how you fill out the W4 certificate, that determines the employer withholdings from the paycheck. Yeah, Social Security withholdings, Medicare withholdings, yeah, and again, this whole dependent exemption, a lot of that changed with the Trump tax law. Again, that legislation, I didn't necessarily spend a lot of time on it this particular semester, but we'll see the week coming up. Maybe that's what I'll do the week coming up. Maybe we'll spend the time on that. So the employer sends the money to it withholds from your check to the Internal Revenue Service along with your name, social security number. So again, there's got to be identification, referencing identification to what's going on. Your withholding counts towards your annual income tax bill that you calculate when you file your tax returns in April. And then there's a couple main points here. The employee fills out the W form to inform the employers how much tax to withhold from the paycheck based on the filing status, dependents, anticipated tax credits, deductions. See, that's the modern version. You notice that the word exemption isn't in there. If the form is filled in incorrectly, you may end up owing taxes. The IRS simplified the form a couple years ago. Employees can change the withholding at any time by submitting a new W-4 to their employer, and the new W-4 must be filled out whenever you have a new when you have a new job. Basically, is when you're and folks, again, partners, employees, contractors, all of that stuff. Everyone's not an employee anymore. Certainly, I'm saying at St. Peter's, I'm an employee, but in the private equity firm that I work for, I'm a partner in that, and and get compensated that way. But I'm not an employee though. It says so. Yeah, the employer now W. I remember as a kid, the first time we did this. I remember that my first job was I was painting. I was a painter, like a building painter, and I had to fill this out. It was interesting. So it's important to complete the W-4 correctly because the IRS requires people to pay taxes on their income gradually throughout the year. If you don't withhold enough tax, you could owe. I don't know if it's a surprisingly large sum, but yeah, there could be some. But the interest is generally not terrible. But don't be concerned about that. Um, if your tax accountant will help you sort through all that, and if there's penalties or something like that. At the same time, if you withhold too much tax, the monthly budget will be tighter, and you don't get the you're giving the government an interest-free loan, and when you could be saving or investing that money, earning your own return, and you're not going to get the overpaid taxes back until the following April or whatever it is. Whenever you get your tax refund check back. When Trump got in, I stopped getting refunds. I started owing money. So the Trump thing didn't work for me in that respect, even though I agree with a lot of his ideas, but it didn't work for me in that respect. So at that point, the money may feel like a windfall, and of course, and anytime most people, you got to be very careful if you get thousands of dollars in a refund or something that you think about, what you're doing with that money. It's far better to pay off your property taxes or pay off any debt. And then the money that you could have been using to pay off property taxes and debt that's coming from your normal income, you use that to, go on vacation or buy a jet ski or whatever, do something like that. Okay. Yeah, there's a redesigned form in 2020. Okay. Again, the new job thing, we already discussed that. And yeah, the sort of the specifics here, the revised form the revised form aims to make the process of determining how much an employer should withhold easier. If you're single or have a spouse who doesn't work or don't have any dependents or only have income from a job, you're not claiming tax credits or itemized deductions. Filling out the W-4 is relatively simple. All you have to do is provide your name, address, social security number, filing status, and then sign and date the form. Okay. Yeah, the whole dependent thing, we have those notes somewhere here, right? Didn't we have this stuff someplace? Where was it? Yeah, it was that first publication that we read, the first one. Dependents, standard deductions, filing information, all that kind of thing. Yeah. And it says, dependents. And then you go through your filing status, your dependents, and who your dependents are, and things of that nature. Um, that's a qualifying child, a qualifying relative. Okay, and then there's a table and the rules are summarized in this table. To be a qualifying relative, the person can't be your qualifying child or the qualifying child of a taxpayer. The person either must be related to you, um, or must live with you all years as a member of your household. The person's gross income for the year must be this is why I can't claim my mom because her social security is bigger than that. The gross income for the year must be less than that, and you must provide more than half the. So this I do 100% of this, but this is where we get blown out of the water. It says relatives don't have to live with your father, mother, grandmother, but like I said, that it's the gross income part of it that messes us up. Yeah. So qualifying child, I don't have kids, but son, daughter, stepchild. But again, so these very legal, yeah, these very legal pieces to the puzzle here is what the big part of it is. Stay in the call. Yeah, stay in the call. Yeah, the very legal reading here is really what this is, and you got to keep that in mind. It says you can't claim any dependents, you or your spouse, if filing jointly, could be claimed as a dependent by another taxpayer. You can't claim a married person who files a joint return as a dependent unless that joint return is filed only to claim a refund of withheld income tax or estimated pay tax. You can't claim a person as a dependent unless a person is a U.S. citizen, U.S. resident, U.S. national, or resident of Canada or Mexico. Interesting right there. You can't claim a person as a dependent unless that person is your qualifying child or qualifying relative. So for me, that I'd be I'm saying I'd be in this category of testing whether those are true or not. So, but again, it says you can't claim a dependent if you or your spouse, if filing jointly, could be claimed as a dependent. So if someone else is claiming that person's, you can't be a professional dependent, right? Kind of a thing. You can't claim a married person who files a joint return unless the joint return is filed only to claim a refund. So I don't do joint returns. I'm not married. You can't claim a person unless that person is a U.S. citizen and all this other stuff. And then certainly with the child, it says the child must be son, daughter, stepchild, foster child, brother, half sister, half brother, right? Must be under 19 or younger, under age 24 at the end of the year. If the person's a student or younger than you, or any age, if permanently and totally disabled. The child must have lived with you for more than half the year. The child must have provided more than half of his own support. Okay, so you see the qualifications for the whole dependent situation. So that was always a question when I did that. I said, am I dependent or somebody else a dependent, kind of a thing. Okay, so but this is the most important piece of the puzzle here. And it says estimating your taxes becomes a little more complicated. Um, if it's so, then if you have a dependent to provide information for someone else's earnings, someone else's income, someone else's tax credits, right? This sort of steamrolls itself into this, right? And it says your employer will not send a W-4 to the IRS. After using it to determine your withholdings, the company will file it. You can change your withholding at any time by submitting a new This is to your employer. And it says you're not sending this to the IRS. It's just providing the employer guidance is really what that is. Okay. There's some questions here. If you start a job in the middle of the year and weren't employed earlier in the year, there's a tax wrinkle that can save you money. You'll be employed for no more than 245 days of the year. You request in writing that your employer use the part year method to compute the withholdings. The formula assumes a full year employment. So without using the part year method, you have too much withheld and we'll have to wait until tax time to get the money back. But yeah, so the W-4 is the employment certificate is really what that is. Okay, and again, it's filled out by an employee to instruct the employer how much to withhold from the paycheck. If the IRS requires that individuals pay income taxes gradually. So my situation, I have no dependents, zero. Okay, and notice there's no exemptions, because when I was a kid, some of that happened. So we had that. So the 0 or 1 claims, it says you can no longer claim allowances. So it no longer matters if you claim a 0 or 1 on the W-4. Before, claiming a 1 meant that you're single and have only one source of income, and you'd still receive a refund from the IRS at the end of the tax year because less tax was taken on your paycheck than if you claimed a 0 allowances. This means you'll get more money from each of your paychecks. Okay, so the 0 or the 1 there's more or less pulled out of the check is really what that is. It says before, claiming 1 meant that if you're single, you have only one source of income, you must still receive a refund. So 1 means a little less is taken out. But then if you claim a 0 allowance, the 0 allowance is a little more is taken out. But it says, so this means you'll get more money from each. So again, yeah, depending if the 0, whichever one takes out less, takes out less money from your paycheck, you'll obviously have a higher paycheck, kind of a thing. So it's one, I forget which one it is, but it's one or the other. And then it says, how do you fill these things out? So again, even if you're working part-time jobs, you certainly want to understand this stuff. It says, how do I fill it out? Well, it says if you're single, have a spouse that doesn't work, you have no dependents, you have income from one job, you're not claiming tax credits, providing your name, address, social security number, and its filing status, and sign and date the form, and that's it. Okay, so that goes through. So you sign, date, social security number, your filing status, and you're not claiming credits. Provide your name, provide your address, social security number. You only have income from one job, and you don't have dependents. Is like sort of the simplest version, which is a lot of people though. A lot of people are in that particular status. Yeah, this refers to the 2017. It says for the 2019 filing season, many people who got tax refunds in previous years found that they had to pay taxes when they filed their 2018 returns. The 2017 tax reform reduced the tax rates for many, but the IRS also reduced the amount of taxes withheld from wages to reflect the tax law changes. So people who did not have enough taxes withheld, the IRS introduced a new form in 2020 to resolve the problem. Now the W form is no longer used to claim withholding allowances. Okay. And here's the big one, the difference between the W form and the W2. The W4 is to the employer. The W2 tells the IRS what the employee earns. I don't know if the Social Security Administration gives that or whoever generates that, but we'll see that in the next set of notes. It says the W2 tells the IRS what. So if it tells the IRS what the employee earned in the previous year, I guess that's the business submitting it. We'll see in the next set of notes. It says the employer should provide a W4 when so you fill out the W4, you take and then I guess the employer fills out the W2. Yeah, it's the employer because St. Peter sends you one, right? That's the employer that works on that. And here's the W2 notes. It's the wage and tax statement. It's the document an employer is required to send to each employee and the IRS. Well, that answers our question. So the W2 reports annual wages, amounts taxes withheld from the paycheck. So obviously the employer is sending this to the tax collection agencies. A W2 employee is someone whose employer deducts tax from the paycheck and submits the information to the government. Okay, so the W2 is generated, so the lower number is generated by the company, by the employer. So it reflects income earned, taxes withheld, the prior year to be reported on your income taxes. Employers use W2s to report the FICA taxes for employees, and that's the Social Security and the Medicare payments from your paycheck. Also uses W2 to track individuals' tax obligations. The employer is legally required to send out a W2 to every employee to whom they pay a salary, wage, or other form of compensation. This does not include contractors or self-employed workers who file taxes with different forms. The employer must send the employee W2 form on or before the 31st of January, so the employee has ample time to file income taxes before the deadline, which is April. So I generally get them in January. I remember it's always cold when I get it. The Federal Insurance Contribution Act taxes employees through the year. So the employees must file a previous form along with the form W3 for each employee with the Social Security Administration. This SSI uses the information to on these forms to calculate Social Security benefits for which the worker is entitled. So yeah, so now we're even talking about the W3, which is a company or an employer to Social Security Administration form. Okay, so I didn't define the W3, but that's what that is. So it goes from the employer. And if you receive a W2 in January, it reflects your income earned for 2021 for the previous year, for the previous calendar year. How to file these forms if you're an employee of a company who received the W2 for your income taxes, and it'll be sent to you automatically. And the employer will also submit a copy to the IRS. The W4, when you're first hired, provides the information to your company, needs to track a full payroll, tax withholding, employer provided benefits, and tax pre-tax contributions to things like a 401k retirement plan. The W4 tells the employer the amount of taxes to withhold from the employee's paycheck based on the person's marital status, number of allowances, independence, and other factors. All right, when you prepare income taxes, you'll need to input data found on the W2 onto the 1040, right? So he goes from the W2 to the 1040, either by hand or electronically. Online tax preparation software is available. Fine. So what information does the W2 wage and tax statement include? It includes no matter who the employer is, it's the same data. The form is divided into state and federal sections. Since your employer must file taxes at both levels, some fields provide employers' information, including the company employer's identification number, the employer's state identification number. The fields are detailed of the employee's income from the previous year. The employee's total earnings from the employer for the year recorded along with the amount withheld in tax from the employee's paycheck, separated into withholding for federal income tax, Social Security tax, and more. The employee also works for tips field, and the fields that show if you have an entry for that. So if you work multiple jobs, you have multiple W2s, you need to input them all separately. When the employee files taxes, the amount of taxes withheld accordingly on the W2 form is deducted from the gross tax obligation. Okay, the W2 tracks the employee's income and tax liability. is really what that's for. If the income report on employees' tax doesn't match the income report on W-2, the IRS could audit that, audit the taxpayer. Okay. So if your 1040 it doesn't match your W-2, that's another bell and whistle that's going to go off. So I'm trying. I've said it over the semester. What the sort of the warning signs are to the IRS to say, hey, we need to check these, to reconcile these numbers. It's an accounting organization is what the IRS is, and so it's going to be people that measure everything. And if you're very cavalier and you're just very unexact with everything, that's not going to help you. How to read a W-2 form statement, numbered and lettered boxes, and we go through it right here and reflects how much you earned and taxes withheld. So A to F include name, address, employer ID, your social security number, state ID, the employer state ID, taxable income, wages, salaries, tips, bonuses, all that. How much your earnings were subject to social security tax, and box 4, the amount of social security that was withheld. Uh, Box 5 spells out how much of your pay is subject to Medicare tax, how much is withheld at the Medicaid. So here's the percentages now. There's an employee person, there's an employer person. So as you're working, the employer's got to pay some of the tax, and the individual has got to pay some of the tax for Medicare. Part of the tips thing or whatever. So the 9 is a tax perk which is left empty. 10 reports how much you receive from the employer and dependent care benefits if applicable. This box details how much so this is the Trump thing, right? Dependent care benefits. So you have children and you're paying for their tuition while they're in high school. You got to report that, and I think that was what the New York State issue with Trump was. The box details how much deferred compensation you receive from the employer and a non-qualified plan. Okay. Um, Other compensation or reductions from your taxable income in a single or double letter code that corresponds each. It might include, for example, contributions to a 401k plan. And there's a whole bunch of other things here. This box has 3 sub boxes to report pay that is not subject to federal tax withholding, employer sponsored retirement program, or sick pay, or something from an insurance policy, or something like that. Okay. Disability insurance and union dues is this other one. So additional tax information that may not fit into the other sections. And the last 6 boxes are related to state and local taxes. How much you pay is subject to taxes, and how much is withheld. Okay. And so the W-4 is completed by every employee for withholding purposes. The employer must use the information to determine how much tax to withhold from the employee's paychecks. And most employees fill out the form, fill out the W-2. I'm sorry, fill out the W-4. Okay. So the employer can generate the W-2 is really how that works. And there's a 1099 if you're sort of an independent contractor. And I think that the notes I took this for said employee here, but this is the 1099 is for a contractor. There's other stuff here, gaming facilities and things. If you have some income from that, if you paid interest on federal loans, there's some sort of benefit, some sort of tax benefit to that as you're looking through this. So, college tuition expenses might entitle students to tax deductions or credits. Okay, and this is just a bunch of questions. Okay, if you lose a W-2, what's the difference? The W-4 is filled out by the employee to provide the employer with the tax ID number, usually social security number, marital status, the number of allowances and dependents, and how much tax to withhold from each paycheck. The W-4 is filled out when an employee is first hired, or if any changes are made to the filing status or withholding. The W-2 is filled out by employers at the end of the tax year and sent to employees to input their tax return. So you get the W-2 in January, you fill out the W-4 when you start. Okay. So instead of doing this all in class, we did it here. So I'm not going to repeat any of this stuff in class. It's this we did. Yeah, I yelled this out, but we can just sort of, whatever, gray these out at this point, just to remind us that we took care of it. We took care of the W-4 and then the W-2. Okay, we did those. Okay, what's next is the now we did the tax liability lecture and I just saw it here. If you look at your tax liability, so that's this one. That's the 73-minute video. We talked about tax liability, but we didn't work out the Excel. We're going to do that today. And that'll be it. So this will be a relatively short one today. Okay. Okay, so we're here with this, and actually, okay, just gonna delete everything, and we're just gonna redo the whole story here. Okay, and like I said, these are now. I don't know if this is gonna be a. Uh, I have to dream up the next assignments. What we're gonna do. It might be some macroeconomic stuff. So, the most common type of tax liability for Americans is a tax on earned income. For example, assume that Ann earns 60,000 gross income, which is reported on a W-2 form at the end of the year. Okay. The federal tax rate is 22 for that level of income, meaning the marginal rate. So Ann's tax liability would be 8,949 based on 2020 tax brackets. Let's see what I did here. What I did, what you did, what we all did here. This we don't need for the time being. I don't know. Let's see what I did here. Oh, yeah, these were 2021 brackets, right? I hope these are 2021 brackets. 4525. Yeah. Yeah, 209. So somewhere in here, this should have said we saw 2020 in here by accident, but it should say 2021. Yeah. Okay. This should be 2021. And yours should say that too. Folks, that matters. That's not nothing. That's not nothing. And even the student model here. Yeah, so I gotta go back and change these. This is 2021. Save that. So, like I said, you guys have this online. Okay, so and the video we're making the again when you use all my notes, there's always going to be something. All right, so always just keep always just keep that in mind. There'll always be something that we got to fix here. So, okay, we're here with this. Oh, all right. So stay focused on this one. That's the 100 whatever the 170 the 180% version of this. So yeah, gross income. And for example, okay, so gross income 60,000, which is on. So the W-2 comes in January, right? It says the end of the year, but whatever, January. And then it says the federal rate is 22%, and the liability 8,949 based on 2021 brackets. So she would owe 10% on the first 9,000, and then 12% on the 30,000, and then 22% on the last 19. So that 60,000 gets broken up into a couple pieces. Now, instead of now, I've done this in class where we sort of got the tax brackets, but we took care of the tax brackets um, already. So I'm not going to just rehash those. I'm just going to copy them from here from our 7 tax brackets. Okay, that's why that's there, and we'll just drop these right in there. Boom, dropped in there. Okay, and the gross income number is 60,000. Okay, we entered that. And the standard deduction, we're going to come to that in a second. That's all again, that's all from the 1040 for the 2020. And we did that in class. There's video on that. Okay, we've discussed where all these numbers come from. So I'm not going to just repeat that. And all this is just simply these are the tax rates. Boom, there's your tax rate. Now again, that 20 this is bolded, so we're sort of cheating a bit here. This is bolded because we're only gonna use 3 brackets. And why are we using 3 brackets? And I keep getting this question in class from someone. Um, what you're gonna do is you're looking at the 60,000. You wanna break this up into pieces that equal 60,000, right? So these 3, this one is gonna be this minus that, right? Then it's going to be 40,525. The higher bound minus the lower bound. Those only add up to 40. The first 2 brackets only give you 40,000. So your 60 is here. You're not going past 86. So you're going to subtract it from the lower bound. And there's your 19. So whatever that was 49,000 or 41, whatever, it's 40,000 something. And then so you need another 19. You didn't, the whole bracket here is 46,000. Some of you are having a lot of trouble with that. I noticed that in class. So that's how you got your see that this is a check for this, that, this one, and this one. These check each other. Okay, those 2 check. And now it's just the same thing that we've been doing. Okay, this is just equal product, right? Those 2. What you can do here, and we got to change the form. You can say Control D, which takes the same formula the whole way. Get rid of these dollars because you never want to have dollar signs the whole way through like that, right? You just want the top one to have a dollar sign. So the taxes you owe for the first 10,000 are about 1,000. The next 30,000, it's about 3,000, and the next, notice this, for the next 20,000 is about 4,000. Okay, and once again, you add up, right? That's 8,949, and I think we had that someplace up here that it said that. Okay, but there's some other stuff here. There's some other stuff going on. So the tax liability would be $8,949 based on 2021 tax, which and then also for the tax, and we did this in class this week, and the tax rate is 8,889.49 divided by the amount subject to tax. So the tax rate would be 14.9%. Now, there's a couple other pieces to this. It says assume the W4 result in the employer withholding 6,500 in federal taxes. 6,500. Okay, so your tax liability is this number. I'm sorry, is this right? 8,949. But the federal taxes were withheld, and also a tax payment was made on Form 1040 of $1,000. So you started paying this. So you don't just have an $8,949 tax bill. So your tax liability would be what you owed minus what was withheld minus your payment. That's what you would owe. That's your tax liability is that number. That's your tax liability. Okay. Is 1,449 because you paid parts of it during the years. That's why I reviewed the W4 document, and we talked about the 1040. I think we have the 1040 somewhere discussed here, correct? Let's see if we have it. Data collections. Yeah, the 1040 was in class. Sorry. I'm leaning over here. Did we do a 1040 video? I don't think we did. Yeah, we went over. So we could do just very quickly, since I think we have a few minutes here. I can glue into this. I can glue in the Form 1040 also, just because we spoke about it this week. So let's the pie charts we did, and then we'll do Form 1040. Yeah, because we got a couple. I could do 10 minutes on the 10. Folks, this is sort of a review of what we spoke about in class. So yeah, so this is done. Okay, this we have done. Okay, so you should repeat this. Okay, this was bolded. So again, the marginal rate is when you go down. As you go down the list, you bold out the sort of the last rate that you're using. And this stuff, you're just now. I have it here. Yeah, this is the legal way to sort of write this, but the math guy likes to sort of stack it a bit. So Ann would owe this, and then 12% of the first one. You could do something like this. You could sort of grab this. Right there. There. So this. Here, 12% on the first one, 22%. So these two we did. This down. We don't need in particular. Like that. That's even better to do it that way. Because then you know what you can do, you can concatenate and you could start link. And actually, we'll take advantage of this little bit of time here, and maybe I'll show you a little concatenation work with this. And actually, I might do it for this one. So yeah, so since we have the time, am I gonna be able to do it here? So what did I turn this into? 4 lines. So I would need 2 more lines on this is what I would need. We have gross income there. I don't know. We can do this. We can cut. We could sort of save it like that, right? Because we need 2 more lines. Okay. I didn't center this. So that's probably why that's okay. Yeah, 1, 2. Yeah, let's do it like that. So, and we can take these, copy right there. Yeah. And then even better though, even better. You can say equal. Remember this thing from class, the concatenation, and it's going to be. What do I want here? I want this, comma, space quotes on the first. And this is $, space quote, comma, like that. And we got to format all this, but you'll see how it's not really, it's not really how it's not looking like this, but we're going to fix that in a second. See, that was the concatenation. See, you typed in concatenate, you put the variable in there, you put a comma, you put a string, another comma, the other variable. Okay. And then also this thing is of income. Okay. Okay, we got to remind ourselves what that all looks like. And we spoke about this in class the other day. So let's go to. Yeah, but that's concatenation, but let's do. We care about text. We did this in class, right? Yeah. There you go. If you want percentages, if you want stuff in dollars, okay. Remember that? So yeah, maybe we said we would. Maybe it's good. So maybe we'll take the time today to mess with this. So this is going to be for the percentage. It's going to be the first one. So this will be text parenthesis. You have the variable there, comma, quotes 0.0 percentage, like that. Right? Do we get that? Yeah, I think so. Yeah. And you see now it looks like 10%? And this thing for the dollars version, this is text quotes $. Okay. Yeah, we don't even need the decimal. I don't think so. And we don't need what else? We don't need this, the $. It put it in for us already. There you go. See? And now you can do that for all of them. And here, I know that was a little small. That text was a bit small there, but let's make it bigger. and we'll because we spoke about this in class. It's a good see. It refers to these two. So now I have all the what do you call it in there? I have the that one. That one. Okay, let's go back and look at this. So again, the bigger font here for you guys. This refers to the percentage, that 10%, right? So text, parenthesis, all the syntax, you're programming, folks. Quotes on the first text, the 9,950, right? And then you can come down to this one and come down to that one. And this should be the next, not on the first, but this should be on the next. And this is last. Okay, something like that. And this needs a period here, not a comma. So like I said, so you can fix this as you it should be, this should look how it's supposed to look. And okay. There. And now notice how quickly I did all that. That's all three of these. Right? That's all three of these. So it refers to everything. It refers to this, right? It refers to this. Okay. It refers to all those pieces as you go through it. So see, concatenate text. So use the text function, the concatenation function. All right. So you typed in text, parenthesis, the cell address, a comma, quotes. And like I said, all you need to do is just go to the Excel page I keep referring you guys to. Just type in Microsoft Help Excel text function, and it'll tell you what the syntax is. Okay, that's it. That's all. And it's there for time for the whole time immemorial, whatever, however you want to say it. Okay, so we still had to do that. Uh, you know, the 60,000, we could do it up here too, but you saw how to do it. Okay. I don't need to keep going bananas with this stuff. But for something like this, sort of a list, you want that like I said, you could go berserk programming that way. Okay, but that's how so we have three of them here, three concatenations. And see, it refers to the dollar value, the green goes there, amount subject to tax, and the 22% goes there. Okay. And then you put the text with commas. Everything's comma separated and either in quotes or another function. Text is another function, another Excel function. Okay. Okay. So we did the W4. So let's go to 25. Tax liability we did. Internal Revenue Service we did. Gross income is coming. Deductions are coming. Yeah, here's the form. So yeah, actually, just in terms of time, since we have a little bit a sliver of time, we could do a third, sort of a third thing here. This is the 1040. So yeah, so this might be our forms lecture. Now I'm not going to jam in all these different schedules online, but it's certainly important to go over this threshold. You have the thresholds here. Yeah, so I'll use this sentence structure for the W2, the W4. Okay, so and then form and 40. Yeah, like that. W2, W4, and then 1040. So yeah, so we did all this. So yeah, so very quickly, what the 1040 is, the 10 again, you have these on the Blackboard website. It's a standard Internal Revenue Service form that individual taxpayers use to file their annual tax income returns. The form contains sections that require taxpayers to disclose their taxable income for the year to determine whether additional taxes are owed or whether the filer will receive a tax refund. Okay, so that's what that looks like. This is okay. We're okay with this. All right, we're still sharing here, which is good. The 1040 is what individual taxpayers use to file their taxes with the IRS. The form determines if additional taxes are due or if the filer will receive a tax refund. Personal information such as names, addresses, social. Again, we have all number of dependents are asked for, and we looked at Form 501, and we went through the dependent table at the beginning of this lecture. A filer also needs to report wages, salary, taxable interest, capital gains, pensions, Social Security benefits. So there's a whole list of stream of incomes. Taxpayers may need to file supplemental tax 1040 forms depending on their situation. Okay. The 1040 needs to be filed with the IRS by April 15th. Everyone who earns income over a certain threshold must file an income tax return with the IRS. Businesses have different forms to report their profits. Okay, so keep that in mind. The IRS overhauled the form a couple years ago after the Tax Cuts and Jobs Act and examined, according to the agency, ways to improve the filing experience. There's a shorter 1040, an easier way to communicating with the future tax law change and reducing the number of 1040s which taxpayers must choose. The new 1040 form includes 2 pages to fill out when they're available on their website. 1040 can be mailed in or email or e-filed or emailed or e-filed is the better word. And also, in the week we went over the different schedules. We certainly did something like that. And like I said, I keep referring to and we'll head back to that. But the Jobs Act. So again, at some point we'll go through the changes that legislation. Now it's like I said, I could teach a whole course on the tax law changes from 2017, but I'm not necessarily going to do that. But we certainly could. Yeah, and we also did the pie charts as to how many filings that the IRS managed in 2021. So that's like 240 million or something like that. Filing status, name, address, again, all that stuff is the same. Number of dependents, and the form asks about full year health coverage. Yeah, I get bit on that often. I'm not going to go into that, but I get bit on that quite often. The 1040 income section asks the filer to report wages, salaries, taxable income, capital gains. All the different versions of income. Okay, so that may have been a question somewhere. What are the different? Because what did I work on? I worked on the. We just worked on it yesterday. The answers to assignment number 2 was here. Yeah, different ways. It doesn't say 1040, but this was I think this is the federal income tax guide. Yeah, I threw up some of the answers. This is I got the answers together for assignment number 2. We'll be grading that this weekend. The capital, and again, you should go through. I'm not necessarily going to go through this in the video, but you should go through what a pension payment is, what a Social Security benefit is, other types of income. You should go through all of this. Very important. Very important. The new tax legislation eliminated deductions for the unreimbursed employee expenses, tax preparation fees, moving for a job except military and active duty. The new 1040 uses building block approach and allows taxpayers to add only schedules that needed to their tax return. Some individuals may now need to file one or more of the 6 new supplemental schedules with the 1040, in addition to long-standing schedules for items such as business income or losses, depending on whether they're claiming tax credits or owed additional taxes. Individual taxpayers, however, only now need to file the 1040 with no schedules. Okay, and there's a whole version of forms here. There's a 1040 NR for non-resident aliens. And like I said, you guys can go through all of this. The variations of the 1040, which are here, variations of the 1040. What does this mean? This is so this is non-resident aliens. Fill out this one. Do you hear me laughing while I'm saying that? Anyhow, representatives of a deceased person who would have to file the form 1040, fine, or some represent an estate or a trust. Okay, from that. And then some of this other stuff here: American Samoa, Guam, Puerto Rico, U.S. Virgin Islands, who have net self-employment income and do not follow 1040. There's a Spanish language equivalent, S 1040 SS. Number two, the form is used to figure and pay estimated quarterly taxes. Is that one estimated tax applies to income that isn't subject to withholding. This is estimated tax, which is right here. This is the amount you owe line. This is a statement of company taxpayers' payment for any balance on the amount you owe stuff. Right, if there's a balance there, you got to deal with that. This is for mistakes. Okay, like a correction version, the 1040X. This is for seniors. Large font. It's not shaded. A standard deduction chart that sort of, I guess, helps a little bit for this with sort of the target audience. Yeah, filing status, whether you're using the standard deduction or with the itemized deductions that the Tax and Jobs Cuts Act allows you to. And again, we'll go into the. But what I suspect is, as it says here, there's a higher standard deduction which says you don't have to go bananas itemizing everything. And this other stuff, we've seen this a number of times. This is for the tax year 2021. What are the standard deductions? And they're all sort of listed right here, and you guys can very easily look at that. That's the list of standard deductions, which are right there. And again, every time I do this, I sort of organize it a little bit better. So I'll try to maybe restack this for you on your Blackboard site. 65 and older, people who are blind, kind of a thing, and some of this. So okay, single or married, which is fine. And again, there's another deduction here. 65 or older, single and not widowed, married filing jointly. So yeah, this is again, obviously I don't pay attention to because I'm not over 65. Okay, but there's other deductions here that you can sort of deal with. And this is for tax year 2022 that's filed obviously the next year. These are a little bit higher. So yeah, it lists some of the deductions and then some of the sort of the elderly benefits. There's some of those that we've had a lot of experience with the whole standard deduction argument. Okay. Standard deductions can't be taken by an estate or a trust, but only by an individual who's filing a short return due date to change in accounting period, or an individual who is a non-resident alien. So it can't be. So there's the list of people who can't take the standard deductions. And here's some additional schedules to help the taxpayer report the tax obligations that we all are due. And it compiles financial information away from the form, but uses 1040 is the primary source of reporting. That's the primary source of reporting. For Schedule 1, this is additional income or adjustments to income is Schedule 1. Alimony, disposition, proceeds from sale of businesses, educator expenses. There's a whole list of other income from Schedule 1 is on line 8 of the form, and adjustments are on line 10. This is to report additional taxes, alternative minimum tax, or repayment of excess premium tax credits for insurance bought through health insurance marketplace or something like that. It's self-reports self-employment taxes, Medicare tax. Okay, so it's that kind of thing. It's these two parts form Schedule 2 are reported on line 17 and 23 on Form 1040. Okay, so that's where that is. This is additional tax credits and payments. 2 is additional taxes. This is additional tax credits and payments, dependent care expense credits, residential energy credits, excess Social Security taxes previously remitted, federal income taxes previously remitted. Okay, non-refundable credits from other schedules. A is itemized deductions. B is interest and ordinary dividends. C is net profits from businesses. D is capital gains and losses. E is supplemental income and losses. EIC is earned income credits. And then there's some other schedules here that we're going to get to. But so for A, it's a taxpayer's federal income liability, and it's minimized when choosing a larger of the standard deduction or itemized deductions. The itemized deductions calculations include medical expenses, dental expenses. There's a whole list of these things, certain interest assessments, theft losses. Okay, but you got to you have to have documentation for when you itemize, you have to have documentation and letters and contracts and bank statements. B is used for taxpayers who receive greater than $1,500 of taxable interest or ordinary dividends. It's also used to report interest from seller finance mortgages, accrued interest from a bond. So the more financy people out there, ordinary dividends as a nominee. Okay, so the very specific tax codes that have been lobbied for by groups that are out there. C is an activity qualifies as a business if the taxpayer is engaged in activity for the primary purpose of producing income or profit. The activity is also considered a business as long as the taxpayer is involved in the activity with regularity and continuity. And the profits are on Schedule 1, line 3. It's also used on Schedule SE. So that this is sole proprietorship. Some of these, right? If your business was a sole proprietorship or qualified joint venture and you meet other criteria, you can report your business operating use Schedule CEZ. All right, so now you're really getting into the sort of the decision making of the IRS. This is taxable income from the sale or exchange of a capital asset. That's rather self-explanatory. The gain arises from an exchange of an involuntary conversion. We talked about that, the involuntary conversion definition. We have to dig. I have it in the notes here. We're going to bold that involuntary conversion. Uh, Gains or losses from involuntary property usually recognized for tax purposes. If the IRS gives the definition, we're going to go with that because they're the decision makers. Yeah. When property is stolen or destroyed, condemned, or just under the threat of condemnation, and you receive other property or money in payment, such as insurance. So this is dealing with governments, and this is very messy. So that's what involves. That's so if we can use the IRS definition, we'll always sort of go with that. And I think I have publication 584. I hope I do. Do I? Oh, maybe I don't. Okay. Is that for involuntary conversions? It says the 10% adjusted gross income limitations apply to any remaining losses to federally declared disaster. Okay, so again, there's publication you can reference you can reference a lot, but that's basically what it is. So it's an involuntary conversion occurs when your property is destroyed, stolen, condemned, or disposed of under the threat of condemnation by the government, and you receive other property or money in payment, such as insurance. So if City of Newark buys property and then tries to sell it or develop it or something, they can also be called involuntary exchanges, and it's a whole. You got to watch The Sopranos, to understand it, right? So anyhow. E is used to report various types of additional income or losses. And this is supplemental financial activity ranges from real estate, rental incomes, royalties, partnerships, estate trusts, residential interest, a residual interest in real estate mortgage investment conduits, and all sorts of complicated structures. One second, folks. Okay, so we have this one, the capital gains and losses, supplemental income and losses. Okay, partnerships, estates, trusts, again, residual interest in real estate mortgage investment conduits. Yeah, we talked about that. Supplemental incomes, and this is just from earned income credits. It's from that, and that's obvious. It's substantially the qualification of your qualifying children by remitting IRS your child's name and all that other information. Okay, there's other schedules here: credit for the elderly disabled, profit or losses from farming operations, household employment tax if you pay cash wages to household employees, and those wages are subject to various federal taxes, farming or fishing trade income, net earnings from self-employment, and on and on and on. Refundable credits. Who needs to file? Again, your age, U.S. citizen. You need to file federal income tax returns. Okay. The IRS requires an individual gross incomes levels to file taxes. The gross income threshold based on filing status and age is listed below. So if you're under 65, older taxpayers have higher thresholds, and it can change if neither one or both individuals are in a marriage is 65 or older. But so if you're making notice how these numbers are just about the deduction numbers too, right? If you're earning over 12,550 and married 25,500. I checked this. This isn't wrong. It's $5 for married filing separately. It is $5. I thought that might have been a typo. I'll check somewhere else, but it could be a typo. My source had it as this, but my source could be wrong. Here, let's do it like this. Okay, so if it was in 501, we had 501 opened already. So let's just do. Sorry, it just I know my operating system and my internals on the computer. I know I need to replace this because this not responding nonsense is getting annoying now. Anyway, my cache is worn out. I know that the computer cache is worn out. That's the short memory space to introduction. If you have little no gross income, reading this section will help you decide if you need to file a return. Okay, no, it is $5. It is. So this is table one for this is the 501 publication. Yeah, this is the 501 publication. I think it's table one. Yeah, yeah. So it is $5 requirements. So if your filing status was single, you're under 65. If your income was at least 12,550, and you can see the whole entire table here. So again, we're referring back to publication 501 again. Okay, which is right there. What's the Yankee score? Okay, good. We're already 2-0, which is good. Oh, okay. Stanton home run. Hits a home run, which is good. They're already up on them, which is good. Okay, but there you go. That's where that came from. Okay. You always go to the balance. That's generally pretty good. Second children, dependents may not be required to file if they can be claimed as dependents. So if the dependent's unearned income is greater than 1,100, earned income was greater than 12,550, or gross income meets certain thresholds, the dependent must file their own Form 1040. And the rules change for single dependents as opposed to dependents who are married. Okay. And there's some specifics they're required to file the form. So regardless of the income or dependency status, some of these situations include but not limited to special tax such as alternative minimum. You receive health account distributions, net earnings from self-employment or at least 400. You met income threshold limits for wages earned from a church, and there's a bunch of questions. What's the form used for? Is the form the same as the W-2? It's not. W-2 is a wage and tax statement and employees receive from a company. The information from the W-2 is used to fill out the 1040. Okay, you can find them online. One of these is for independent contractors, the 1099. The other one is just for employees. The 1040 is for if you're an employee. And we're going to hit audits and things of that nature. But the bottom line is the central part of the tax filings for the United States citizen is the tax from all the taxpayers' financial statements eventually feed into and support tax schedules branching out of it. Regardless of an individual's filing status or income, taxpayers who file taxes will complete the subversion of 1040. Okay. So yeah, so there we go. So I think hopefully we had a good lecture today. So yeah, we hit the W4, the W2, and we did the tax liability problem. So this was and the Yankees are ahead. So I think we're good. I think we're good. Okay. All right, folks. All right, folks. Thank you, and we'll see you soon.